want to invite Hubert Danso, good friend of HICA for some years. He's very active in getting investment in the African continent from Africa Investor. This is a gentleman who's going to talk to us about how do we, it's a whole discussion around financing in our space, but financing generally in the hospitality and tourism industry, and financing in Africa as such. So Hubert, I'm going to hand over to you, and then, yeah, you want to invite your panels? Yeah, okay. So can we invite the panel to come and join Hubert on this podium? Jean-Pierre Labuschagne from Deloitte, and Zamin Jokweni from Norton Rose Fulbright. So we've got some lawyers in the mix. And then we invited Gerard Botha from Rand Merchant Bank, RMB. And lastly to Pedro Ferreira from Dominion Capital. So that's a panel. That's hopefully going to, you know, just give us some boom in terms of financing discussion. Hubert, it's over to you.
Thank you. Afternoon, everybody. Can you hear me? Closer? How about that? Fantastic. As indicated, my name is Hubert Danso. I'm the Chief Executive Officer of Africa Investor. I'm going to be moderating this panel today. I'd first like to thank the organizers for choosing such a wonderful name for the session, the African Investor, although you might want to lose the N because we have some international guys with us. And today we're really going to be focusing on banking, private equity, and sovereign wealth funds, and really just trying to see where this new class of investor, what the new trends and dynamics are for the industry. To address some of these key issues, we're going to really need to start looking at some of the evolving trends and dynamics. What are the innovative new products in the market? Real estate indices, should there be a better and more pragmatic use of capital markets? As I mentioned, sovereign wealth funds before, I mean, the growth and emergence of this new asset class. Sovereign wealth funds, as you'll increasingly see in the continent around the markets that have recently discovered resources or are now pursuing the resources, are going to be the largest conglomerate of sovereign wealth funds in the entire world. And building on that, the question is, how can the industry tap those opportunities? We know that, for example, that the Libyan Investment Authority has a position in the Michelangelo, and I'm sure my fellow panelists are really going to begin to talk about some other specific examples. So really, to address this, I'm aided by an elite and distinguished group of panelists, which I'm going to briefly introduce. So please give them a warm welcome. This is your opportunity to prove that you're awake. So to my left, it's Jean-Pierre Labuschagne, who is the infrastructure and PPP specialist at Deloitte. To his left, it is Mzami Nkwena, excuse me that I didn't give you the click, but no next time, director at Norton Rose and Fulbright. Round of applause, please. Prove you're awake. Okay. To his left, we have Gerard Botha, who is an investment banker at Rand Merchant Bank, RMB. And last but not least, we have Pedro Ferreira from Dominion Capital. He's the executive director and board member of that institution. So I'm going to jump right into this, and I'm going to start with you, Jean-Pierre. I'm really wanting to sort of get your view about which companies or brands in the hospitality industry are really the best example of companies that have found investment partners and secured project funding across the continent. We always sort of hear about the broad brush, usual suspects, but you know, you're in the industry at a very granular level. Tell us something we don't know, hopefully.
Well, I think what a lot of funders are looking for is an operator that knows what they're doing. And so the track record of an operator in a country and in an industry is incredibly important, because eventually what an investor is looking for is, can you make the hotel work? So splitting the hotel from the operations from the actual piece of land or the building is very important to understand, how is that building going to be operated? Are the bed numbers going to be filled? Are people going to be coming back? So you get a lot of the usual suspects, A lot of them are represented here. A lot of them are international ones that don't say have a presence in South Africa, but have presences elsewhere. So an operator and the reputation and the skill of the operator is crucial for funders to even consider looking at making an investment in a country. I think what funders are also looking for is maybe not the, I don't want to say the first tier operator, but that local knowledge of operating a hotel in a country is also key, especially if one is looking to enter a new market.
Right. Humor us with some names or some brands that sort of come to mind for you on a continental basis.
This is a bit like saying thank you at a wedding. If you forget someone, someone's going to be annoyed with you.
Right.
So I'll rather skip on the names.
Okay. Let me narrow it down then. How about giving me some examples, hopefully, for Southern Africa? You're closer to home here.
I'm closer to home here. I mean, so I think when's moving from south into Southern Africa, I think a lot of the South African hotel operators have made immense strides in penetrating that market.
Right.
And it's slowly stretching out further and further from the home base of what one knows. So obviously the Proteas, the Sun International, the Sogo Suns. So in terms of South African brands moving out, those are operators that have credible markets and experience that investors are looking at. But one can also throw in the bigger groups, the Westons, the Marriotts, the Sofitels, the Kempinskis, that might not have a South or Southern African experience. But if one's looking across the rest of Africa, those are also key brands that people are looking for. And that's the type of brand that investors are looking at to running a hotel.
I mean, thank you very much. I mean, sort of moving on now to, identifying what the traits of success are. Gerhard, I'd like to jump to you here. Can you just give us some examples and practices and processes of some of the successful operators and companies in this space?
So
I'm intent on getting some specific names.
You're trying very hard, yeah.
So I think in terms of funding hotels, I think as most guys across this room knows, it's difficult to find a good funding source. So it's really to look at a mix of equity and debt. I think let's start off on the debt side. Traditional banks, in terms of funding hotels during the development stage, and especially if it takes 2 to 4 years before there's any cash flows on the table, it's quite difficult. And if you also take into account you need a stabilization period, it's quite tricky. So traditional banks have typically shied away from these type of opportunities. I think a way to analogize it is a lot of guys look at it as project financing almost for a resources company. And what's nice on resources is you'll put project financing for 3 years, but you've got a guaranteed offtake at the end for the product, which you don't have in the hospitality industry. It also go quite a bit of a way in terms of getting guys and banks and so on over the line if operators were to put some skin in the game. But what I do think is there's quite a good opportunity to go to your DFIs, so the IDCs, the DBSAs, go to your sovereign wealth funds that have got mandates to invest in these types of assets. So effectively looking at Nord Fund, Swed Fund, looking at the governments in the United Arab Emirates, Qatar, and all these funds, and also not just looking at the funds themselves, sovereign wealth funds, but also looking at the family offices and the high net worth individuals that we've seen chase quite a bit of trophy assets. And then, of course, another way of funding it is effectively looking at local partners. Who's going to build your hotel? Who's the contractor? And do they have funding? And what's the reliability of your equity check? A lot of banks look at. They say, guys, the hotel takes so long to develop. Do we know this guy is good for, is it a quality equity check that we can still rely on in 3-4 years' time? So, it's as much as finding an equity check, but to get traditional bank financing, guys are saying, please, show to us that you've got a quality, reliable developer and also a quality and reliable investor that's writing your equity check.
Gaha, based on the models that you've sort of put out there and the sources, which model operator would you say the sort of up-and-coming operators in the market seeking to raise capital should most definitely include in their research?
So I think the South African market is quite a little bit difficult. So us as a bank, we lend into all the big groups, but we lend on a portfolio basis. What we've seen across Africa is guys finance hotels on an individual basis. So even though you might go to the same sovereign wealth fund every time, you don't fund it as a portfolio play. You don't go to the same property company and set up I call it a holdco or a propco with multiple subsidiaries. So guys don't look at, almost building a relationship between an operator and a property owner over the long run, in which they can effectively help the property owner build a portfolio. Because once you have that portfolio, and this is across grade, this is across location, and once you have that, going to a traditional bank, it's much, much easier in terms of raising finance.
They say if you want multiple answers, you must ask a lawyer, so Mzami. Can you, depending on which side you're representing, can you cite some key funding sources as well, just to build on where Gerhard's been and his views from a Pan-African basis? Different types of financial sources and investment available?
Other than the ones that Gerhard has mentioned, that's pretty much it. I mean, it's your traditional banks, your commercial banks, it's your property funds, or your real estate funds. In South Africa, in particular, we've seen a number of real estate funds that have been set up. Although we haven't seen many that have been tailored specifically for hospitality and leisure, but they've really been for real estate. That's a source of funding. The development finance institutions are a good source of funding. Your IDC, your DBSA from a South African perspective. You also have your GEPF /PIC. So yeah, essentially as a source of fund, there is a broad range of institutions other than traditional banks. So a mix of these is usually important. In fact, more times than not, you will find your DFIs will be your first source of funding for your hotels.
Okay. And importantly, are you seeing any changes in the types of funding support that operators should be asking? I mean, we see often in the infrastructure space for very large projects, you see a number of new trends. One of which is that the project developer spends an inordinate amount of time engaging a DFI that can only write a small check, and not enough time engaging larger institutional investors that could come in a more substantial way. Is there any sort of trend similar to that in the sort of hospitality space? I mean, are DBSA and others, what's the sort of check size one should be looking at? I know it's all relative to the project, but are there any new dynamics in terms of what you should be asking, how you sequence that, when you should be asking, and how can you use one strategic investment partner to catalyze another?
Look, I mean, certainly where DFIs are concerned, they're a good catalyst into your sort of traditional debt funding. You need your initial funding for the project or for the hotel development. And again, if you look at most of your DFIs, because they have a developmental imperative, some of the questions which your commercial bank would ask, particularly where risk is concerned, you may find that the DFI is not that it's not concerned about it, but it will not place as much emphasis as a commercial bank certainly would. So that gives you access to funding, which, if again, as you progress with your construction or the running of the hotel, it makes it easier to have a track record for the hotel going forward. It makes it easier to refinance a hotel, or at least if you want to look for cheaper sources of funding. So again, you can use some of the sources of funding to leverage or to get onto others, like DFI onto a traditional bank.
Okay.
We have seen, and it's something we were discussing earlier on, still hasn't gained any traction, but we have seen some success in it in South Africa, where we're talking about a REIT. We haven't seen one for Africa. That's perhaps something to consider going forward, which is a real estate investment trust. But
What would that look like, for example?
essentially, well, what the rate would do is it would be set up as a fund, but it would sort of be listed. For example, it would be listed and you'd be able to trade it, or you'd be able to trade that on an exchange. We do have a couple of rates in the continent. For example, in Nigeria, there are already some. In Kenya, I understand that they are contemplating one. In South Africa, we do have one, but it's the only one. So I'm saying, I mean, this has been a different dynamic to read.
How would this REIT be different from the existing ones, specifically in its composition? Just
Well,
broadly speaking.
One is access to the stock exchange, for example, where it is listed.
Right.
That would be one of
So
the
new source
it
of
would be
capital.
access to that, yes. There are obviously certain tax benefits that a REIT also gives you that you would ordinarily wouldn't have. Where the REIT itself would have certain, it would be tax exempt on certain issues.
Okay.
And in other words, you find a lot of the taxes in the hands of the investor and not the REIT itself.
Right, right. And are there any reasons why that type of innovation, in your opinion, hasn't happened as yet? I mean, we've got so many capital markets all looking for new product. Levels of liquidity are quite low. Wouldn't this be an opportunity? Or is there a downside to it?
Well, I mean, I guess it's a question of, I think it's a question of timing and risk appetite.
Right.
Again, as I said, we've only had one in South Africa, and maybe, again, we still need just one to explore into the continent, and you may spark something.
Fantastic. Pedro, you're the man holding the money as well, so is this REIT idea, does it resonate with you? Is this something that you'd moot to your colleagues and share with your global investment partners and African investment partners?
Of course so, Herbert. I think that on the perspective of the investor, and as well also the local partner, to frame the discussion a little bit, people used to speak about Africa. Then they divided Africa between North and Sub-Saharan. And I think as Sub-Saharan Africa emerges as a big potential for the future, people start dividing it into West, East, South. So there are different realities. And of course, as a Portuguese-speaking company, we operate in Angola and Mozambique mainly. And sources of capital like the ones you described, didn't exist. Private equity didn't exist. Sovereign wealth funds didn't exist. And on the banking sector, it were pure local banks with, of course, huge interest rates that would kill your project from day one. So we as an investor had to be, for the past 35 years, very creative in terms of the investment strategy that we put together. First of all, of course, knowing the grounds very well, it's key element for everything. Having developed so far 285,000 square meters gives us that, in a way. Second of all, the connection between what is local interest and what is international interest. So having a cooperation with companies in the past like Exxon, BP, Total, oil and gas pure, I'm sure of that. But however, the demands and the requirements were there. And of course, to us, it was crucial from the beginning to find projects that actually made money, because in the first place, that's what we're searching for. So at the end of the day, the risk of the operation in terms of the hotel business, in our experience, and we worked with Intercontinental, Marriott, Four Seasons, basically comes or came in the past. Now it's different. I will go down to that. But in the past came mainly for building up a project that had different aspects to it on the residential and on the commercial side that would give you the cash flow from day one to be comfortable about moving forward. That was our sort of little secret in the past.
Right.
For the
Is that a global trend? Was it a model that you innovated, or has it just been done successfully elsewhere? Or?
It was a model that we innovated slightly in terms of Portuguese-speaking Africa. However, it was a model applied very much so into Brazil, which is a market that we know also very well, for more or less the same reasons: closed market, language as a barrier of entry, and difficulty on finding debt sources. Yes. As Gerhard was just explaining, I think the key element was the sort of shift from a project that becomes international, in terms of international appetite, more increasingly, is definitely the DFIs. When we raised, for instance, the Sovereign Fund of Norway as our partner for a couple of our projects, that brought the African Development Bank, that brought IFC, that brought OPEC. So all of the other DFIs tend to find the comfort on sort of mitigating the risk of Africa into that perspective.
That's an interesting dynamic there. Are you